Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is the Tuesday strategy session. Today, we're going to talk a little bit about that ORB strategy. It's not really the best day to be trading the ORB, but it's not a bad one either. It's a great day to set up our ranges and see exactly what we have going with regards to potential trading opportunities. It's going to be interesting news day. We've got some action out of Iran. We've got partial blockage of the Strait of Hormuz from during the negotiations with Iran today. We've also got further fallout from the Epstein thing that we started talking about yesterday. And bigger than life, there was another high-profile resignation last night from Hyatt Industries. I'm going to go ahead and show you the Hyatt chart, daily chart, one of the biggest hotel chains in the world. And I tell you what, just brace yourself and get ready for this. This is the new norm of operating in the financial markets. We are going to see this stuff, and it's going to be crazy, and it's going to start happening more and more and more. So you're definitely going to want to take a look at that. As far as what we've got going for a couple trade ideas, still looking at Bitcoin. I'm going to pull that Bitcoin chart again. Australian dollar, New Zealand dollar, that was a fantastic trade that's pretty much cashed in. We'll go ahead and take a look at that as well. U.S. oil, rollover is upon us in U.S. oil. I haven't made an oil trade yet today. I missed a couple of entries that I'm not real happy about, but that's okay. Today is not necessarily the best day to be trading oil. The news cycle is working against you, and then you've also got rollover from that March to April contract. WTI crude, can you believe it? We are already trading April WTI, and that typically means that the bullish market, the bullish springtime seasonality is upon us. So there's a lot going on already. So good to see everybody back in the room over in YouTube land. Trending politics, good to see a trending welcome. Taco Tuesday from Jason. Yeah, good to see you, Jay. Taco Tuesday, that sounds pretty good. Maybe a little bit later. Tore up some, let's see, we had egg whites today and a little bit of chicken breast, so tacos sound good to me. I'll take some of those. Tina Shane, good to see you. Tina, welcome. Hi, Shane. How are you? Really, a taco is coming again. I wouldn't mind having I don't know, maybe a couple carne asada, pollo asada tacos. It'd be pretty good. For now, we're going to have coffee. How's that? Good to see everybody over in the How to Trade community. Tuku, good to see you. Tuku, Bobby Bob, always a pleasure, guys. Today is a strategy session. Lita, always a pleasure, Lita. If there's anything that you want me to look at as far as a market, be sure to drop it in the live chats. I will pull them up. As of right now, we're going to work through a few ORB setups that aren't really great setups. We're also going to look at the Bitcoin chart, the Australian dollar Kiwi. I really like that one. We have RBNZ interest rate decision coming during that early Wednesday session, that early Wednesday Forex session. And then also we've got to talk a little bit about Hyatt Industries and U.S. oil. Now, before we get started, remember, if you want to trade anything that we talk about today, head on over to the How to Trade channel, on over to Switch Markets, partner of How to Trade. We've started running this 9 EMA strategy, and this is a good strategy pack. I get a lot of questions about, Shane, I'm a beginner, I need a strategy, or I'm a veteran trader, and I need a strategy. The 9 EMA strategy pack has everything you need to get started. Now, I get the question, Shane, do you trade the 9 EMA live with real money? I go, no, I don't. No, I don't. We traded on demo. Pretty much that's what we're relegated to here. We traded on demo with demo funds, but I do show you exactly how to execute and dial in your risk versus reward. And we've got several videos on this page right here. We show you how to install. That's a good one. And then also you've got a PDF, and then you've got the full video right there, the 8-minute video where I break down exactly what it takes to trade this thing successfully. Now, in real time, what does this look like? What does this strategy look like? Well, it looks like this. I'm starting off with gold and silver because this is very important. This is sort of a couple of concepts that we talked about in our weekly hot picks, and I wanted to throw the 9 EMA on these longer time frames to remind everybody that you don't just have to scalp it on a 1-minute chart. Matter of fact, always remember, and this is the general rule of anything in the markets, the smaller the time frame you use, the greater chance you have of running into choppy price action. Today, I've taken 3 euro trades. All right, I've had a pretty good day. I'm not going to complain. I'm smiling ear to ear, but each one of them was sort of a choppy mess. And the reason why it was choppy is because I was executing longer-term levels, but I was doing it on a 1-minute time frame. So the price action wasn't really as pretty as I would have liked it to have been, but still productive. Tough day to trade, though, to be brutally honest with you. I expected a better day today. WTI crude's got me a bit frustrated. We'll talk about that, but a lot of events, key events and rollover really hurts you with any commodity. So on our gold and silver charts, what do we got on gold? We got a sell-off developing in gold. This was interesting. I was asked this question the other day after the market analysis dropped today over on Switch Markets YouTube. There was this big sell-off, and the question was, Shane, is this short still in play? And I said, yeah. It is. It is. I mean, your stop loss would have been probably right above your trigger bar. That is a tremendous risk to put on. But still, the short side of this market looks to be, at least on the short, with a bias, I mean, my long-term trends are bullish. There's no doubt about that. My short-term bias, though, maybe an intraday bias, probably going to be to the short side. So we're off a little bit today in gold. This is the one that really has me a bit mixed up. I don't get mixed up very often. I typically always have a great idea of which way the markets are going. I do get fooled, just like anybody. We all get fooled sometimes, but that silver chart right there, that's a weekly 9 EMA silver. That has me concerned. That has me concerned to the downside of this market. Now, clearly 75 is the 10,000-pound gorilla in the room for silver. There's no question about it. It is the two-way catalyst for action. You think silver's a buy at 75. I think it's a sell. Now, of course, I don't know what you think, and I don't know that it's a sell, but that's the idea behind the two-way catalyst, an area of two-way price action. Those happen around key numbers in markets that are trending. It's uncanny the way they develop. 5,000 in gold, 75 in silver. What do we have developing? Gold selling off a bit underneath 5,000. Okay, we're not too overextended just yet, but we've got to always know where 5,000 is. Are the buyers in here somewhere? Don't really know. We're starting to get extended from that key level over here. This is scary. If I was holding longs in silver, I would be a little bit concerned because look at what you have. You had that sell signal set up on our 9 EMA on a weekly time frame. The next week, compression, very, very tight price action there. And what do you have? Now you're starting to roll. Now you're starting to move to the downside. You've broken beneath last week's low. Oh, boy. I mean, this situation could get bad for silver bulls. So I'm watching it closely. I'm not convinced yet that we're going to leave 5,000 and 75 respectively in both gold and silver. But I have to tell you that chart right there for silver especially has me concerned. It has me concerned because you have that sell, compression, inside bar. Boy, those typically mean there's a move coming, especially on the weekly time frame. That's a big deal in silver. Now, as far as what do we have today going on? Well, I mean, if you want to just take a look at the gold chart, this is a great place to look at our intraday price action, 30-minute chart right here. You can see we sort of had a buy signal a little earlier today. Got a pretty good little move. Wasn't a bad move. I mean, you probably would have nailed a nice scalp there if you played it tight. If you're down here, you probably got stopped out before you got your move. But now we're starting to really wonder, is a rebound coming or is it ever coming? This has been a significant sell-off right now. We're printing about 48.67. This is not necessarily a fun day to be trading gold if you're a bull. So I'm watching this closely. I think that we have an interesting situation with regards to a potential market shift. I talked about it in the weekly preview or the market preview, our switch on hot picks. I talked about how things are changing. They are changing. Things are changing in the metals markets. Things are changing in the stock markets. There's a lot of reasons for that. I'm going to give you a few hypotheses here today, but the biggest thing we always have to think of as traders is when the game starts changing a little bit and it feels a little bit different, what do we do with our risk? We dial it back. We dial it down. If you don't know what's happening, you don't have to trade. And if you don't know what's happening and you're going to trade, feel free to cut your risk. Remember, you're not a fund manager. There are no rules. You don't have to trade every day, and you don't have to trade size every day. Getting good at knowing when to trade and when to trade size can make you not just a good trader, but a great trader. Remember our definitions of a good trader. What's a good trader? A good trader is the one that takes all the trades you're supposed to take. What's a great trader? A great trader is you take all those trades you're supposed to take and then make a few good trades. That's what makes a great trader. Don't try to do too much, especially if you don't know what's going on. That's the number one rule. That is the law of the land if you're going to be an active trader. All right. In any case, I'm sort of watching this closely. I mean, do we have an opportunity maybe to buy a little bit later today? Let's go down to a 15-minute chart. You see we sort of had a bit of a sell-off right in there, but since then we just never really got our signal to develop. It wasn't within our 7-bar lag, which is absolutely key. And you've got a situation now where just the market's sort of flattened out here in gold. Curious and curiouser. As far as silver, what can we do on silver? 30-minute chart. We had a bid right there that ended up getting swept out just like the gold one. How about this down here? We can't seem to establish ourselves beneath that 30 level, that oversold level. We're not getting the big rally. So it's sort of a no man's land. 15-minute chart, maybe? No. Not really any signals coming. 5-minute chart? No. Not really out of the 70-30 envelope on the RSI. So as far as gold and silver goes, even though we may want to buy these markets, I don't know if it's the best idea. Ralph H., good to see you, Ralph. Welcome. Let me see. Peckham, good to see you. Hey, Shane, gold just went ballistic again. Gold is not attractive to me. I'm not day trading gold right now, and I'm probably the only one I would say I'm probably the only one on YouTube or on the internet that's going to sit here and say, yeah, I'm not really trading gold right now, but I'm not trading gold right now. I find it to be just an incredibly chaotic market. It's one of my best commodities by far. Gold's one of my best markets. Intraday gold futures, one of my best by far. I want to see these markets slow down a little bit. That volatility is huge. It really is huge. And so I want to make damn sure that when I get in there, I get in with some meaning and I'm not just getting chopped out of positions constantly. It's hard when those ranges are that big. Andrea Garwell, good to see you, Andrea. Welcome. Let me see. Juan Restrepo, good to see you, Juan. Good afternoon, good evening, good morning, wherever you may be. It's always exciting to come in on Tuesdays because that's when I really get to hit the gas and start making trades. Yesterday was a holiday, sort of a dead session, and today's a lot better, a lot better. Let me see. T. Marina, good to see you. Hello, everyone. Hello, T. Oh, wow. I was just in the middle of watching one of your ORB strategy videos, Shane. I paused it to switch to today's live session. Yeah, we're going to look at some ORB setups here in just a second. 15 minutes ORBs. Let me see. Jit and Ren Peru. Man, I am terrible on names. I'm going to call you Jay. All right, Jay, let's see. Sir, what's your view on gold? That was it. I'm staying out for right now. I got a feeling that I'm looking for a buy on that 9 EMA. I don't think it's going to set up for us today, at least not right now. Maybe going into the Tokyo session. I mean, clearly we would want a reason to buy this market, but we're not getting it just yet. I would be very careful with it. That's what I would do. Lewis, good to see you. Lewis, welcome. Let me see. T. Marina, yes, avoiding bad trades, not losing trades. 100%. Remember that as traders, we only worry about the trades that we take. If you miss a trade, don't worry about it. I missed 2 today because I was in a meeting. It's not a big deal. You're going to get more. I had 3 more come my way. It's not that big of a deal. Don't focus on the trades that you miss. Focus on the trades that you execute. So just like T. Marina said right there, yes, avoiding bad trades, not losing trades. There's a big difference between a bad trade and a losing trade. Now, a losing trade is one where we just get chopped out and we just get hit. Our stop loss gets hit. We turn the page. We take our percentage of money off of our account and we move forward. That's part of doing business. That's going to be what it is. That just is what it is. You're going to lose trades. A bad trade is when you won't let go of that losing trade, or you dollar cost average in and try to go against a strong trend, hoping that it'll turn. There's a very simple way to know if you're in a bad trade. If you find yourself hoping that the market turns in your favor, you are screwed. If you're sitting there going, God, I hope this thing turns around, you're already sunk. You're already sunk. If you find yourself hoping that the trade turns around and goes in your favor, you might as well just cut it off, because it means you're already done. Your positive expectancy is gone. You believe you're going to lose. So even if the market turns around and you do win, eventually you will lose. So you need to be very, very cognizant of your psychology when you're in these. You find yourself hoping, you're in a bad trade. Now remember, just because you lose money doesn't mean it's a bad trade. I cut a trade off last Friday that was, I took an $80 hit on a euro trade, which isn't very much, but I took a hit there, very, very tight trade management, and then the market turns in my favor. And so I'm sitting there doing the swing in my head, and I'm going, okay, well, I lost 80 and I should have made 100. That's 180. And it doesn't take too many 180s in a day to really knock your day out. So was it a bad trade? No. It wasn't a bad trade. I knew what loss I wanted to take before the trade. I took the loss, came back, made 2 great trades, walked away with my target. That's the key to this. Cut your losses off. That's it. Avoid bad trades. Don't avoid losing trades, because losing's part of doing business. I hate it, but losing's part of doing business. All right, here we go. Let's take a look at a trade update. This is one that's still on our radar. I'm not going to spend much time on it, but we have to be cognizant of what's happening in Bitcoin. There is a lot of talk about Bitcoin and the Epstein files. I'm not going to cover that again today. I'm going to show you what the impact of the Epstein files is, though, and it's hurting the markets. There's no question about it. Bitcoin could be a big loser here. I've changed my mind, and one of the things that I always reserve the right to do is I change my mind. I came into 2026 as being very bullish crypto, and the reason why was simple. I know we had a cooperative administration. Trump administration was going to deregulate cryptocurrencies and promote them as much as they could. There's a lot of reasons for that, but the Trump family is in the crypto business, and they're in deep. So you have a situation there where, okay, that means the administration, the regulatory end of things, is going to look pretty bullish for our crypto and Bitcoin. The second thing was dovish dovish monetary policy. We know we have a new Fed chair coming. We know we have a new FOMC coming in. more than likely you're going to see a bunch of rate cuts. So if you do get those rate cuts, that's cheaper money with deregulation. That is the bullish case for Bitcoin. And I was a bull. I'm changing. And it's not just because I've watched the market go down over the first couple of months of the year. It's because we see the market dynamic and sentiment really shifting because of our unknown unknown. And that right now is the Epstein files. And I mean, I'm not trying to segue analogy here, but this is it. I mean, this is Epstein files in business and political careers across the globe. We are just getting started. Anytime, and I mean anytime, you see powerful people, billionaires, multimillionaires, 100 millionaires, people with jobs that are basically the goal of their entire existence in life, and they're walking away from it. It means that there's a hell of a lot more here than meets the eye. And take it for what it's worth. Take it face. You don't have to sit around and study this stuff to try to figure out who's going next. You don't have to do that. All you have to do is say, okay, this is interesting. These are billionaires and they're walking away from their posts. This one was fascinating. This one dropped last night after I made that point yesterday. Tom Pritzker announced his retirement as the executive chair of Hyatt. Hyatt's one of the biggest hotel chains in the world. Take a look at the dailies. Take a look at the dailies for the Hyatt. Big bullish move there, right? On the 10th of February, 5.9%. Then you come off about 0.25%. And then you have this huge day where you got the massive rally and then the big sell-off, sort of that hammer formation, that inverted hammer I always talk about. Then you have the big sell-off yesterday last Friday before the market closed yesterday. And now you've got the bounce. Why would we get a bounce on one of the heads of Hyatt stepping down? It's uncertainty being resolved. That's why, that chart right there is why the head of a company like that, or somebody that's on a board, or somebody that has a tremendous amount of sway, that's why they would step down from their position. And that's to preserve not just shareholder confidence, but to just get away from any sort of controversy that may, in fact, hurt the stock. There is no debating that really, since these things dropped, since this files really started gaining huge steam over the past couple of weeks, since we just saw the big 3 million file release, look at this volatility. And it was clear right away that there was a name in there that should, they were the Hyatt voting board, governing board was sitting there going, man, Pritzker, your name's in there. You got to get away. And that's exactly what happened. So what happened here? You resigned, stepped away. Now you got the rally. Now, does that rally hold? Maybe that's good enough. We don't know. But my point is this: the volatility here is big. And it's very, very important that we understand that the volatility is a product of the unknown unknowns. And right now, nobody knows what's going to happen. We hear rumors of more redactions from the Epstein files. There's another 3 million files and 14 or 30 terabytes of information on computers all over the world. This is real stuff. This is stuff that's going to impact our markets. And you can see right here, here's our VIX. Take a look at our VIX. Our long-term average in our volatility index is about 21, and we're right there now. Anything above 21, I don't consider it horribly elevated yet, but I do see the potential for us to get a tremendous rally, maybe up to 28 or 30 out of our volatility index. That will tell us that fear is in the market and that something may be coming our way. Now, listen, I don't like talking politics much, and I damn sure don't want to talk about anything in those files. But I will tell you that the financial world will be shaken by this. To what degree? We don't know yet. Can we trade it? Trading this successfully is more like navigating the volatility, the uncertainty with our money, and not getting sort of hung out to dry when maybe a big resignation comes down the tubes. There's a lot of it. I mean, there's a lot of these, top corporate law firm lawyers, Kathy Ruminer, or whatever her name is, top counsel at Goldman and Sachs. That's a big deal. That's a real big deal, because what that means is you're starting to see turnover, not just at these companies, but everybody that's affiliated with them. And the idea is that we don't want our names dragged through the mud. And Goldman and Sachs said, see ya. Even though you're top counsel, you're basically recusing yourself from the entire environment. What does that do to our risk? It heightens it. There's no question about it. Remember, CBOE Volatility Index prices deferred month premiums on S&P 500 options contracts. As those premiums start moving, that volatility index goes up. As it goes up, that's what we call fear in the market and angst. I believe we're going to see a spike in this thing up to 30 or so. I really do. You can see right up in here. That came across the board last October. You saw a rally towards 30. You also saw another one in November. But realistically, this type of action that we saw last April, when we thought a full-blown market crash was coming because of the tariffs. This is interesting right here. I think we're going to hit somewhere up in here. I think the right name's going to get dropped or something's going to happen, and I think you're going to be right up in here, right around 32. Could prompt a short-term pullback in equities. More than likely it will be brief, but it's the kind of turbulence we have to account for in our trading. If we don't, we're going to wind up in big trouble getting hung out on a position we shouldn't be hung out in. Watching the VIX closely, though. Bitcoin, I think Bitcoin's another one of those that could really come into play. We're watching 58,000. That's a big level down there. That's sort of my last line of defense. Once 58,000's gone, I think it gets really bad for Bitcoin bulls down here, right down to 40,000, 39,000. Now, that being said, you can see that the bidders were there at 60. And they were there, and there was a lot of them. But these levels are significant. We can't seem to get back up over 70. Nothing's really happening in Bitcoin. That tells us that there's a lot of uncertainty in the market. An absolute lot of uncertainty. I mean, take a look at your dailies. There was your big plunge. There was our test of 60, bounced off, and now we're just sort of rotating right up in here. Topside resistance firmly at about 70,500, 70,800. Be very careful with this market. This feels to me like we're loading up, maybe to make another leg down. However, it could reverse and go bullish as well. I don't genuinely know. And when we don't know, we stay out. We fall back on our technicals, and we use our heads and try to keep our money out of trouble, out of harm's way. Very, very important. All right, we got one more trade update here, and then I'll go ahead and take some of your questions. I see a lot of them out there. This was the Aussie Kiwi. This is a trade that I put out yesterday to come in ahead of the RBNZ, which we'll talk a little bit about here in a second. Tonight, during the U.S. overnight, early Wednesday Forex session, the RBNZ is going to get involved with their latest interest rate decision. All right, in any case, right here, 38% was an interesting level. We were looking at about, 116.95, somewhere in there. You see, we tested that zone beautifully and got a tremendous bounce. It was a very nice bounce. We sold off, and now we're sort of on the rally. Let's take this down to a 30-minute chart and see exactly what developed with the test of our level. So, as you can see, took some heat right away. That's not uncommon when you're playing support and resistance levels against prevailing price action. It's really not uncommon. What we want to see right away is that price action sort of gets stabilized, at least right around our entry level. So you can see this one right here sort of sold off, took some serious heat there, came off just a little bit to a low of about 116.79. So you're looking at about, a 15-pip draw, something like that, 16 pips. And then you got your rally. So your rally's looking pretty good right now. You're back in the green. 117.20 sort of was the maximum high today. It looks to me like we're going to spin higher, but 117.20. I believe our next level was 117.30, something like that. So you're right in the ballpark there. If your entry point was down, I believe we had 94 buys, something like this. So if this was your entry point, you have a decision to make. Are you going to move to break even? Are you going to let this play out? Or are you going to take the profits now? The key is to be consistent. Be consistent with what you're doing. If you're going to move your stop loss, your initial stop loss to break even now, I don't have a problem with it. Just make sure that you do it consistently. Don't get caught moving it sometimes and not moving at others, and then you run into some real issues when it comes time to have any sort of statistical track record. Any sort of statistical track record will be moot and null and void if you're only managing your trades a certain way a certain portion of the time. So if half the time you're moving your stop loss to break even and half of the time you're just letting it twist in the wind, you're not going to have any results that are worth quantifying. It's just going to be random. You're either going to get lucky or you're not. I don't want luck. We don't want luck. Not interested in luck. If we wanted luck, we would go buy lottery tickets. If we wanted luck, we'd bet on sporting events, or we would go to the casino and play slot machines. We're not interested in luck. We're interested in your performance over time. How are you managing your trades? How do you handle yourself in the live market? Are your goals realistic with what you're trying to get accomplished? That's what we're after. I want to find out if I'm good enough to get this done over the long term. And by moving my stop losses and my trade management parameters all over the place, it becomes really difficult to understand what's luck and what isn't luck. So if you're going to move your stop loss to break even, go ahead and do it. Just be consistent. If you're going to let it play, go ahead and let it play. I mean, that's just the way that you have to come to terms with trading. That has to be all about you. That's about your psychology. It's about what you want to get done. Now, we've got things like the 9 EMA that can help you. I mean, we know exactly where we would have to get in. You'd buy in right here when you get your crossover, and then your stop loss is either here or here, and your profit target's either up here or up here. So we've got all sorts of different tools we can help guide you with. But at the end of the day, it's about you. It's about how you want to trade. For me, 117.14, you're up about 25 pips, something like that, 20 pips. I would feel pretty good about just letting it run. However, I wouldn't want to give back my 20 pips. So that would depend on where I was money-wise. If I don't have any money for the week and maybe I just need to rack a profit and get going, or maybe I had a bad week last week and I need to bring some money in, maybe I take the money right now. Maybe I take the profits right now. Maybe I'm way ahead from last week and last month, and I say, let's just take a position and let this thing roll. Try to catch a runner. There's nothing wrong with that either. Just be consistent. Be consistent with your thinking and do the same things that really all should be designed to contribute to your success. All right, we are going to have to talk about ORB, but to be real honest with you, today is not a good day to be doing the ORB. That's for sure. All right, we got a few questions here to answer, and then I'll go ahead and we'll set up the opening range breakout. Lebo, good to see you. Lebo, welcome. Hi, Shane. Do you sometimes experience a bad internet connection when you are trying to trade? I had that problem today. It's a good thing I didn't enter any positions today. Yeah, absolutely right, Lebo. I have fought bad internet connections my whole life, pretty much. I live in Montana, and for a good portion of my trading career, I've lived in rural areas, which means that our internet can be spotty. Now, I've got a pretty rock-solid connection now, knock on wood. That's what I would call as close to bulletproof as you can get. I'm hardwired in, and I got the big download and upload speeds and things. So I feel pretty good about it for right here. However, when I first started, I was going through a satellite connection out in rural Montana, and it was really hard for me. It was really hard. I was at a severe disadvantage because my internet was not only slow, but it would cut out. So when the internet would cut out, it messes your charts up, number one. Number two, if you have orders down, your orders are just sort of left at the market unattended. So if you're going to trade and you have bad internet connection, first thing you got to do, have your 24-hour support phone number to your trade desk. That way, if everything goes down in front of you, boom, you're on the horn to the trade desk. They can take the trades off for you. I think you have an account number and a password, and they can flatten your positions or take the trades off for you. That is absolutely something that you have to do if you're going to trade with bad internet connection. The second thing is looking for ways to improve your connection, and that's hard. Now, most of the places in the world now, if you're in a metropolitan area, you're probably going to have access to pretty good internet. It'll either be hardwired in via cable, or you can also be even cell phones now. I mean, you can get packages where it's unlimited 5G, and that's plenty fast enough to trade with. So you don't want to do that. For sure. Let me see. T Marina, using a VPS is an option. Yeah, VPS, Forex VPS. If you're looking for a free one, go ahead on over to Switch. You get a free VPS with your account, funded account. So that's a good offer too as well. So VPS, yeah, that's another good call, T Marina. You can get a VPS, which is just basically a private or a virtual hosting, which essentially is a private server, a virtual private server where you can actually place your orders and your strategies, and those run on a dedicated server, and it doesn't really have anything to do with you at that point. That can be good too. But if you're discretionary trading, sort of like what I do, I'm going to want to make sure that I'm connected when I'm trading, and that can be tough. If your connection's going in and out, that can be a real challenge. All right, let's go ahead and take a look at the opening range breakout strategy here. And we're just going to run through the U.S. equities indices, and then we'll go ahead and close with U.S. oil because there's a lot going on in U.S. oil. Okay, so here's a good look at your U.S. 500 CFD. And what you have right there is you've got a 15-minute opening range breakout, right? So right there is your first bar, your first 15-minute bar, and your second. This is what we call the two-bar orb. And what the two-bar orb is, the first two bars, price bars, after your market open, are going to give you an opportunity to trade. Now, we do all sorts of different kinds of orbs. Probably the best orb that I think out there, the most effective and the one that can get you in on big moves, is going to be your two-bar orb after the U.S. Open. So I would be looking to trade the U.S. indices, U.S. equities indices, the U.S. 30, the Dow 30, the S&P 500, the NASDAQ, and even the Russell 2000 you can trade. Those things are pretty locked and loaded to build an orb every single day after that 9:30 a.m. Eastern time open. So in this instance, right there's your open. You can see it's 7:30 a.m. my time. I'm 2 hours back of New York City, which is fine. Just got to get up a little earlier. But right there's our bar number one. There's our bar number two. Now, we draw our range around those bars And now we're waiting for the first bar close, price bar close to close outside of our range. If it's above the top of our range, we're going long. If it's below the bottom of our range, we're going short. As you can see, we haven't got one yet. We haven't gotten one yet. And that's a good thing. That means that our qualifier, our bar close outside of our range, we need that to get in the market. So right now, it's no harm, no foul with the S&P 500. We haven't got faked out. We didn't get a close and then a reversal. So we haven't lost anything. And that's fine with me. The idea behind adopting any kind of technical or any kind of price action strategy is to keep you out of trouble. The opening range breakout keeps you out of trouble by having that qualifier. You have to get a bar close outside of that range in order to trade it, in order to enter the market. That's fantastic. I really like that because that keeps us out of those markets that are extremely choppy, keeps us out. That's exactly what we're seeing today. I mean, we might get a close right here outside. We'll go ahead and take a look at this in 15 seconds or so. Let's go back to US 30, right? US 30, interesting type of a scenario here for the US 30. Really sort of is this as good? No, this isn't as good. 15-minute orb. You can see right there, boom, there's one, there's two. Let's go ahead and just mark these real quick. There's your one, there's your two. Now let's go ahead and just draw the orb, the opening range. Biggest, most important part of all of it is your opening range. What happened? You got burnt on this one. You're not quite out yet, but you got burnt on it. So right there was the first one, candle one, candle two, and right there would have been your entry. So if this is your entry, it's going to be a sell entry. You're looking for a profit target down in here somewhere, probably in relation to a key level, maybe last week's low, maybe an order block a ways back, maybe just a fixed risk versus reward. So let's say your stop loss could be above your orb right there, or you could bring it right down above your trigger bar, which is an incredibly tight way to play, but it's not a bad way if you want to scalp these breakouts. Something like that, well, right there, you probably lost. And if you had this one still up here above your range, you're still in it. You're still in it. Now, something called the 50% rule could really have helped right here. 50% of your range. That would have been your entry. So you would have waited, right, for this close beneath outside of the range, and then you would have rotated back up and hit this 50% level, and that would have been your sell. This would have been a pretty good way to trade this market. However, sometimes when you do that, you miss the big move. So if you took this one initially, you're not out of it yet. It's not over just yet, but it doesn't look good. It really doesn't look good. This market's gone against you dramatically, and now it's just sort of rotating inside of that range. Not a good situation. Now, one way that you can avoid that is use my favorite, which is the 30-minute orb. There's bar one, there's bar two. So just to sort of show you how you can stay out of trouble with this strategy, there's bar one, bar two, and you can see that you still don't have a trade. Very tough day to be trading the orb. I figured we'd get some market moves today because we're off of the holiday. Not true. US 100, interesting, right? 30-minute chart right here. What could we be cooking up? Well, you see right there, there's your opening bell, ding, ding. Then right there's your second bar. So essentially, trade during this U.S. session has been contained inside of that opening hour range. That's not uncommon. This one right here, I would feel a little better about. Why? Compression right up towards the top of our range. It does look like potentially if we get a close up here, we could wash this out and maybe take it for a jog up to 25,000. That is possible. Anything's possible in these markets. But for right now, the NASDAQ, not really moving. US 30, not really moving. US 500, not really moving. What do we want to do with regards to our trade management if this was the case? We got all sorts of different things we could do. Depends on how big this entry bar would be. Probably, I would be putting my stop loss down beneath this range and looking to get a late day move. Is that a low or a high probability? The later in the day your orb gets triggered, typically you're going to have a lower probability just because there's not as much time to hit your profit target. However, this looks to me like a breakout, could be in the offing. Let's go to a 15-minute chart and see exactly how this one's set up for the US 100 today. 15-minute chart, you can see we didn't really gain or lose anything. Bar one, bar two. Boom, boom. You can see we're right inside of the, we're right inside of the orb. So if I'm watching this very closely and I'm thinking late day trade, what could it be? If I was going to execute a late day trade on this orb, how could I do it? Well, first we got to get a breakout up here. I kind of like that. I might trade that one really tight. Put a stop loss, maybe a late day stop loss right beneath your trigger bar, and then just try to get that runner, get a little bit of heat as we roll into the daily close, into that power hour. It's not a bad way to approach this. Think about what you're doing. You're using a smaller time frame, which is the 15-minute. Okay, this orb essentially is the same. 15-minute, you get that break. What are we going to get? What's our advantage out of using a 15-minute chart and putting a really tight stop loss on it at this point in time? We're going to limit our risk. We're going to limit our risk, and that can be very, very useful to us, especially if we don't have that much time left in the trading day. You know, I think of it as a racetrack. We're almost out of track for the day. We don't have a tremendous amount. We're in, let's see, our trading session's about 4 hours old already. You're looking at about what do you got? 2 hours left, 2.5 hours left. So we're over the midway point of the session. We know that typically this time of day, unless there's an announcement or somebody does something or breaking news, we don't really see that big movement until the end of the day. So is it higher risk taking the trade right now? Yeah, it is. How do we manage that risk? Well, if we're dead set on making a trade today and we want to trade this orb, we would wait for our close outside above the top side of the orb, and then we would go ahead and put our stop loss maybe right beneath that trigger bar. Now, our odds of success, they're not going to be as great as if we give this a great big stop loss down beneath our range and really look to play a runner. They're not. I mean, the odds of our trade going positive before us getting stopped out using a stop loss way down here is pretty good. It really is pretty good. However, our initial risk is relatively large. It's the entire range. Basically, you're betting the day's range right now. I don't know if that's a good idea or not. So we know that if we're looking for a sudden break, maybe this 15-minute chart trades sideways going into power hour, and then we get that break and we're able to just set our stop loss and grab that late day scalp. That could be pretty good too. So we have a lot of options late in the day. I'd probably be focusing, if I was trading one of these orbs going into the U.S. close today, it would be this U.S. 100. Just because I like this formation. Very, very tight. We've tested that daily high a few times. These proximity tests haven't broken anything, and now I think that if we break it and run those highs, we might actually go for a bit of a stroll. Let me see. Got a few other questions here. Lebo, I am trying to get into swing trading, but I'm having difficulty holding position longer than a few minutes. Okay. What advice would you give to a scalp trader to switch to swing trading? It's hard undoing the scalping, the scalper's wiring. I mean, I'm wired like a scalper. I don't like being in the markets very often at all. I like to get in. I mean, to me, a perfect trade is having my order down, having my technicals all done, my order in the queue, watching my order get hit, and then me being paid off within 10 or 15 seconds. To me, that's what trading is. The precision to get your analytics done, nail your entry, nail your exit, on to the next one. That's what I like to do. Now, swing trading, it's just going to be a function of you not worrying about it. It's as simple as that. With a swing trade, your trade management actually is going to be your enemy. You don't want to sit there and try to manage the trade, the price action of a swing trade on a 15-minute chart or a 30-minute chart. What you want to do is you want to know exactly what you have involved, what your initial risk is, and where your stop loss is before you get into the swing trade. And then once you put it down, you've got your entry, your stop, your profit. Turn your screens off. Just leave. Just stop watching it. You know that you've got your risk management developed. You know that you're taking you're essentially, you've taken your position in a market, and then you just let it play out. Now, of course, there's going to be sophisticated questions that arise for swing trading. You know, you might be, okay, I'm in this thing 2 days and I haven't got my money yet. What do I do? Or I've been in this thing a couple of days and I got NFP coming up. What do I do? Well, those are good questions. What do you do? And it goes right back to what I always say is you kind of have to figure out your trade management for yourself. I mean, I know how I like to trade it. I know once my initial risk is down, I don't mind it if these things just play out. If I get hit, I get hit. If I don't, I don't. That doesn't bother me. What bothers me is constantly being caught in, do I move my stop? Do I take the profit? What do I do? So I would recommend easier is better with your trade management, Lebo. And then also make sure that your risk is fully quantified. 1 to 3%, 5%, 7% per trade, whatever you feel comfortable using. Make sure that is in there, and then also your stop loss is located. Stops down, leverage and check, and then you let the trade go. Remember, you're a swing trader. You're not worried about short-term noise. What you should be worried about is broader market structure. Is there a trend present? And what kind of news events can derail my trade? That's what you need to be thinking about, not necessarily price action. Just a thought. Swing trading's fun, though. I mean, you throw down a swing trade, it takes the pressure off you. It really does. You don't have to sit there and stress. I mean, my trades today, I was looking at 30-second charts and going up and down with them, and it wasn't really stressful because the risk was dialed in, but still, though, it is a bit tiring trying to manage those things in real time. Let me see. Saeed, good to see you. Saeed, welcome. What is your view on Bitcoin? Yeah, I already checked Bitcoin. I'm more than happy to do so one last time. I'm not going to give you the whole speech, though, because I stuck quite a ways on it. This is very simple, though. This is just a yearly chart, a yearly Bitcoin chart. We know right now that we've got 62% right around 58,000. That'd be a great bid in my view, but if that area right there does give way, then we're going much lower. But for right this minute, if you had to make a trade right now today and said, Shane, give me a trade right now today in Bitcoin, I'd say you probably shouldn't be doing anything. But this area right here, this 50% yearly 50% level right up around 70,800, you probably could take that sell and feel pretty good about it. But that's a scalp. That's a very, very tight scalp. So I just don't have any desire to do anything with Bitcoin right now. I want to see the market move. And you can see right now for the past, several weeks, we've been stuck in this range, this downside support range, this top side range. Something's going to move crypto. Crypto will break out and start moving. It's just right now it's not doing it. So you got to be careful with that type of a market dynamic. I don't want you to get chopped up. Don't get chopped up. That's the moral of the story. All right, guys, one last thing to cover here, and then we'll go ahead and move forward. You can see the big news today was U.S.-Iranian talks. Tehran says understanding on main principles release. So basically, they had a talk about how to negotiate. And during this talk, during these negotiations, the negotiations to figure out how to negotiate, the Strait of Hormuz was sort of slowed down. Iran fires live missiles into the Strait of Hormuz as Trump envoys arrive for nuclear talks. So you're firing missiles in. Theoretically, that should have boosted crude oil prices, and it did nothing. It did nothing, actually. They came off a little bit. Now we're seeing a late-day recovery in U.S. oil up around $62.50. But big picture, the threats to shut down the Strait of Hormuz, the missiles, all that, the negotiations did nothing. Did nothing to price. I think this is why. Crude oil right now is in an interesting position. If you're trading crude, you've got to be aware of the volume dilution between the March and April contracts. It's almost 50%. Now, as a general rule of thumb, I was more than happy to take trades today. I don't get too scared off of the volume splits, but you do have to understand what that means. When you see volume, I call it volume dilution, and that's exactly what it is. It's not too much volume in the market. It's not really enough. It means that your market's split. So right now you got half of the folks are trading March, half of the folks are trading April. And right this minute, it just means that about 50-50 split. You're probably going to get some wonky price action. And in the idea there that a big block order can really shake the market, that's exactly what you can run into when the markets are a little bit thinner than they probably should be for WTI crude. Now, as of right now, it does look like the U.S. oil CFD is still tracking March. It does look like it's still tracking March, so that's going to change into April. So right now, April WTI crude oil trading right around 62.37, somewhere in that zone, and U.S. oil's trading at 62.46. So if you're interested in maybe shifting your views toward tomorrow's crude oil trade, more than likely that front month, all the volume is going to be on April, and you'll probably see that U.S. oil today, probably at the end of the session during that Forex rollover, roll from 62.49. Right now it's trading. It's trading at about a 10-cent premium. So 62.48 is probably going to come back down to 62.37-ish, somewhere in that range. So there's about a 10-cent premium. That's going to change. So be ready for a choppy price action shift in that U.S. oil CFD. All right, as far as the macros, the macro technicals or the micros, for me, the macro technicals are very important for WTI crude. This is an interesting formation. U.S. oil weekly chart, spike low, spike high, and you've got a key level right in play at 62.39. So that zone right in there, 38% of that area right there, rock solid support. If you do see a sell-off beneath that area, we could bring in that 62% back into play down there right around 59.86. I would love that. $60 bids are probably going to be pretty good. So I'm interested in trading WTI crude. It's an interesting week to be doing so. Iran negotiations. We've got action in the Strait of Hormuz. We've got all sorts of things going on. Big picture, what should we be focused on with crude oil? Well, tomorrow you've got an opportunity potentially to actually miss the EIA. The weekly EIA numbers are coming out Thursday because of the holiday we had yesterday. So it's going to be a pretty good day of trade. It's going to be the first day really where you're on the full volume is going to be on that April contract, which could be lucrative for us. And then also you're not going to have that news item maybe hanging over your head there. So there's my camera hub. So something like that is very, very interesting in what we can really expect out of U.S. oil. For me, today, probably not the best day to be trading oil. I haven't taken an oil trade yet. So that's sort of what we're looking at with regards to commodities. All right, everybody, interesting session. We're still waiting for some moves. In my view, we had some things that came across the board. This one right here, Great Britain pound USD. We sort of outlined these technicals last week. You see that zone right in there, 35.40, 35.50, somewhere in that zone has really looked to be pretty good, pretty big time downside support. I'm sort of watching for this Great Britain pound USD to rotate higher from here. We just have to wait and see what happens. Dollar index hanging in there, still in a very weak position. And also the RBNZ meets this evening. We're expecting interest rates to stay held firm. Let's go ahead and take a look at our expectations real quick. Somewhere right in here. RBNZ, 2.25%. We're not expecting any movement at all out of the RBNZ at this point. So what does that mean for the New Zealand dollar, the Kiwi? Probably not much. We believe it's already priced into the equation. This weekly chart, I would love a pullback down around 59.50. So if the RBNZ does maybe shake the markets up and you see some bearish action in this pair, 59.50 could be pretty good. Could be pretty good. But we got to wait and see. All right, everybody. I'm going to go ahead and sign off for right now. Sort of after the euphoric nature of January, where everybody was pretty much happy in the markets, we've seen a lot of folks just drop off. And that's not uncommon. A lot of times it's not necessarily the doldrums of February, but it's just the actual what it means to be a trader every single day. A lot of folks just drop off the rolls typically after about a month or two, and there's nothing wrong with that. You just have to, if you're going to be in this game, it's a marathon. It's not a sprint. You're going to make some good trades. You're going to make some bad trades. You're going to win. You're going to lose. You just got to make sure that you do your absolute best to manage your risk absolutely aggressively. If I was going to say anything as any type of advice, that's what I would say. All right, everybody. I'm going to go ahead and sign off. You're absolutely welcome, Lita. It's been an interesting day. I'm not too blown away with it. I think tomorrow's going to be better. I think tomorrow and Thursday are going to be very good. And Friday, even Friday, we got core PCE Friday and US GDP. We'll see some moves Friday. But for right this minute, I'm not really blown away with anything. That New Zealand dollar, though, that level at 59.50 is pretty good. We're just trading about 100 pips higher from that. And as far as U.S. oil goes, I'm probably going to fold up the book on it today and come back and trade it tomorrow with a little bit more size and try to make the oil money tomorrow and Thursday. That's what I'm looking at. All right, everybody, have a fantastic trading day. Trade the action well, and we'll talk soon. See you.